Hello everyone, this is Sia from the Research and Development Department in Market Equity, and in this video I'm going to be talking about some of the important instruments and their price movement predictions for the day, which falls on a Tuesday, 2nd of November 2021. Let's begin with the Dow Jones Index, where in the previous videos we have said that it is moving in an uptrend in the 4-hour time frame. However, recently we can see that the strength of the uptrend has started to get weaker due to many reasons, among which the strength of the upwards movement itself getting weaker, and second of all, after the index broke upwards to level 35,890, which resembles an important horizontal resistance level for the index in the 4-hour time frame, it continued to rebound downwards off of around level 36,015 in order to correct, which, due to the failure of holding above level 35,890, it is considered to be a weakness sign in the current uptrend. Not only that, but among the rebounding down off of around level 36,015, we can see that there has been a negative divergence formed in the 4-hour time frame, which is another major weakness sign for the index in the current uptrend, and therefore supports the continuity of the current downwards correctional movement, which might extend to retest around level 35,600 to around level 35,515 before continuing with the overall uptrend. If we notice the RSI indicator in the 4-hour time frame, then we can see that it is currently moving around level 50. However, due to the weakness signs that we have mentioned, which include the negative divergence, we can't say for sure that it will support the rebounding upwards off of around the current levels in order to continue with the uptrend. However, it is most probably supporting the continuity of the downwards correctional movement before the continuity of the overall uptrend. That was it for the Dow Jones Index. Let's move on to the gold. In the previous videos, we said that we were waiting for the gold to retest around level 1,792, which resembles both a horizontal resistance level for the gold in the 4-hour time frame, as well as the broken lower boundary of the upwards channel that was previously formed in the 4-hour time frame. Currently, we can see that the gold is retesting this level, and by rebounding downwards off of it, it will support the continuity of the current downwards correctional movement in the 4-hour time frame, as well as the downtrend in the 1-hour time frame. This bearish scenario will be confirmed upon the breaking down through level 1,788, which resembles a horizontal support level for the gold in the 1-hour time frame, and therefore by breaking downwards through it, it will further support the continuity of the downwards correctional movement in the 4-hour time frame, which will continue to retest around level 1,780, then around level 1,770 as primary targets in the current downwards correctional movement in the 4-hour time frame. If we notice the RSI indicator in the 4-hour time frame, then we can see that by moving around level 50, it supports the probability of rebounding down off of around the current levels in order to continue with the downwards correctional movement in the 4-hour time frame, as well as the downtrend in the 1-hour time frame, which, as we said, will only be confirmed upon the breaking down through level 1,788, and unless the gold breaks downwards through it in the 1-hour time frame, then we would still be moving in an upwards movement in the 1-hour time frame inside the downtrend in the 4-hour time frame. That was it for the gold. Let's move on to the Australian dollar versus the US dollar. In the 4-hour time frame, we can see that the pair has been moving in an uptrend. However, recently it has started to move more like a sideways movement, specifically after it has failed to hold above level 0.7545, which used to resemble a horizontal resistance level for the pair in the 4-hour time frame, and then continued to rebound downwards off of it, where it is currently retesting around level 0.7480, which resembles a horizontal support level for the pair in the 4-hour time frame, as well as the extension of the uptrend line that was formed by the low back in the 29th of September 2021, which was around level 0.7170, and the other low, which was on the 6th of October 2021, which was around level 0.7230, and therefore, by rebounding upwards off of around the current levels, it will confirm the formation of the uptrend line and will support the continuity of the current sideways movement, which in that case will be targeting around level 0.7555 as a primary target in the current sideways movement in the 4-hour time frame. If we notice the RSI indicator in the 4-hour time frame, then we can see that even though it looks like it supports the downtrend more than the uptrend, however, by respecting level 40 and holding above it, it will support the rebounding upwards off of around the current levels in order to continue with the current sideways movement or the uptrend in the 4-hour time frame as well as the daily time frame. Let's move to the daily time frame, where we can see that the pair has been moving in an uptrend, and recently it has formed a peak around level 0.7555 and then rebounded downwards off of it in order to correct, where it is currently retesting around level 0.7480, which resembles an important horizontal support level for the pair in the daily time frame. However, due to the weakness signs that were shown in the 4-hour time frame, as well as the failure swing pattern that was formed in the daily time frame, it further supports the probability of breaking down through this level in order to continue with the downwards correctional movement, which in this case will extend to target around level 0.7450, then around level 0.7420, before continuing with the overall uptrend in the daily time frame. However, in case this downwards correctional movement extends further beyond that, then we will be expecting it to continue to retest around level 0.7315 before continuing with the overall uptrend. However, if the pair does not break upwards to level 0.7535, then the bearish scenario is more likely to continue rather than the bullish one. That was it for the Australian dollar versus the US dollar. Market Equity wishes you successful trading. Thank you for watching and have a nice day.